This video is going to show you how to prepare a statement of cash flows. We have our fourth and final financial statement, which is the statement of cash flows, and it's going to categorize all of our changes in cash for the period. Our change in cash can be seen on the balance sheet. We went from $585,920 to $625,760. So our change in cash is $39,840. So our task is to categorize all those changes that happen to cash during this period. Here's how we're going to do it. We're going to separate it into three categories, and the first category is operating activities. And we're going to put everything from our day-to-day operations, and I did a video explaining why we do what we do, but for this purpose I'm going to briefly run through it. We will begin with net income. We add back depreciation. We remove our gains. If we had losses, we would remove our losses. We analyze current assets and current liabilities. We're going to add and subtract according to our rules, and we get down to our net cash flow from operating activities. You can review those rules in a separate video. Okay, so next we're going to move on to investing and financing activities. And these are going to be more straightforward because we're not trying to back into any numbers. We're going to take what happened to cash for each of these categories. So investing activities has to do with long-term assets. So I'm going to put over here long-term assets, and this is land, equipment, vehicles, any kind of investment. If you have a sale of a long-term asset, we are looking for the proceeds from the sale. In other words, how much money did we get? That will belong here. If we purchase a long-term asset, we will be putting down the purchase price. That is how much we paid. If we had some that we took out a note for, that doesn't go here. Only the amount paid. So we're talking long-term assets. Okay, and then under the financing section, we're looking at everything that happened that we needed to finance our company for. So we're talking about long-term liabilities, such as bonds, and then anything that happened to our stockholders' equity, such as stock, payment of dividends, and any purchases or sale backs of treasury stock. That's what we're going to have down here. And then to finish it out, we will add, let me just show you. We will add our operating, investing, and financing activities. And we will place our, we got our increase in cash after we did that. And we will place our beginning cash balance here. And when we add these two together, we should get our ending cash. And of course you recognize that number. That was our net change in cash that we were looking for. We had $143,450 was positive from operations, $200,000 was negative from investing, and $96,300 was positive, getting us to our net change. That's what I mean when I say we categorized it. Let's look and see how we do this. Okay. We will be looking at our long-term assets, and here is one, okay, and it went from $240,000 to nothing. So it looks like we sold it, but we need to know exactly how much we sold it for. So if I look down here in letter A, it says that investments were sold for $280,000. That's the number I need, so that's the number I'm going to place here, the $280,000. Now just describe it. Cash received from the sale of investments. Okay, the next one that I'm going to look at is my land. So let's look at what happened for land. So I went from having none to having $328,000. So I need to find out whether I paid cash for that. It says equipment and land in Part B were acquired for cash. So I can assume that I used $328,000 worth of my cash to purchase that land. So I would put cash paid for the purchase of land, $328,000. Okay, for equipment, I went from $553,120 to $705,120. Okay, so I can assume, since it tells me down here that it was all acquired for cash. Okay, so that change of $152,000 was paid out with cash. So cash paid for the purchase of equipment. When I net these numbers together, I actually have a negative, which I call a net cash flow used, because it was negative for investing activities. If it had been positive, it would have said from investing activities, but it happens to be a negative number. I spent more than I brought in for these investing activities. Remember, in an earlier video, we went over how to calculate cash received if it wouldn't have been given so clearly to me, because you can reconstruct your journal entry that would have come about that from the information given to calculate the amount of cash received. Okay, let's look at our financing activity. Everything that happens to your long-term liabilities, issuing our own company stock, paying out dividends, and buying and selling our own company's treasury stock. So cash received from the sale of common stock, down here, the 187.5, okay? The way we'll see that is it's made up of two things. Let's look. So down here, you have your common stock, okay, and you have your paid-in capital in excess of par. So these two numbers together, which equal 187,500, that is the cash we got, and that's because when you issue stock, you get cash, and you put the par value down as common stock, and the rest goes into paid-in capital in excess of par, or in excess of the issue price over par. So those two numbers have to be looked at together to get our cash from stock. So that's where that number comes from. And then we have our payout from dividends. In this situation, it tells you down here, Part F, okay, we had $96,000 debit to retained earnings for cash dividends declared. Now remember, you have 3 dates for dividends. You have the date of declaration, date of record, and then the date of payment. Date of declaration just sets up the payable. So we need to look at dividends payable to see if we paid it all out. So if we look at dividends payable here, okay, it went from $19,200 to $24,000. So it went up by $4,800. So of those, I haven't paid out 4,800 of them yet. Okay, so let's just think about that. I declared 96,000 and I haven't paid out 4,800. So the amount I'm going to use is the net of that. So 92,100 goes over here for the amount of dividends I paid. And if I net these two numbers together, I'm going to get 96,300. And remember, I showed you how to calculate dividends in a previous video. When you're just given the beginning and ending retained earnings and net income, all you're going to do is reconstruct the retained earnings statement and you've got your answer. This is an overview of how to prepare the statement of cash flows using the indirect method.